You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Monday, 12th day of August, 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first one is our live training room. That is reserved for members only and those who are taking the 1-week free trial. But this broadcast, the afternoon broadcast, is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. Now, there's a couple different ways you can join this afternoon broadcast live. Best way, just go to mytradingiq.com. Scroll down to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before the broadcast starts. In that email, there's a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it'll automatically log you into our platform. Benefit there is you'll have access to the question box so you can ask questions and participate in the discussion. Of course, there will be days when you're out of the office, away from the desktop, but you still want to join live. And there'll be days when you're busy and can't join live, but want to catch up later. You can do both of those via our YouTube channel, youtube.com/CFRN. You've already got the YouTube part memorized, so all you got to remember is the CFRN. Not only do we broadcast live every trading day on our YouTube channel, we also archive each and every daily broadcast. Currently, there are over 2,600 daily episodes archived for your educational and viewing pleasure. And if you've not yet taken your free trial, your 1-week free trial, where you have access to everything, the live training room, in fact, we treat you just like a member for a full week with one exception. and that's the members only workshop on Thursday night. That is for members only. But for 5 days, no credit card required. You have access to everything. We want you to be able to make a well-informed and intelligent decision at the end of the trial as to whether or not trading is right for you. So if you go to mytradingiq.com, at the top of the page is the link for the free trial. It's a purple button. All you got to do is click it, fill out the registration form. Make sure you fill out everything properly, and we will get your desktop set up, get your indicators indicating, and then your trial will start the following day. Now, you get 5 consecutive days, even if it stretches over a weekend. So don't worry about what day of the week or weekend that you actually sign up for the trial. You'll still get 5 trading days. Now, our daily schedule, we start with a devotional, word of prayer, get into some market news, a recap of the alerts, and about 12:50, Michael will join us, give us a recap of what happened this morning in the live training room. Then we'll go live on the TradingView platform, do some live trading for about 30 minutes. Then I'll come back and wrap things up with our good word for the day. So the topic of our devotional this week is crashing the chatterbox. Now, we started this last week. We'll finish it this week. What is the chatterbox? It's that continuous loop in your mind from the moment you wake up till you fall asleep at night, the one that's constantly telling you you're not good enough, you're not tall enough, you're not wealthy enough, and all the other things that you aren't. And that loop will play, and as long as you listen and buy into it, it will control your life. So the whole idea with this devotional is to learn how to crash the chatterbox, to replace all of that negativity with something positive. Our scripture today is Romans 8, verses 1 and 2, and I'll share with you from the Message translation. With the arrival of Jesus, the Messiah, that fateful dilemma is resolved. Those who enter into Christ being here for us no longer have to live under a continuous, low-lying black cloud. I had a boss one time when I was very, very young. That was his nickname, the Black Cloud. He didn't come to the office a lot, but when he did, oh boy, you felt it. Back to verse 2. A new power is in operation. The Spirit of life in Christ, like a strong wind, has magnificently cleared the air, freeing you from a fated lifetime of brutal tyranny at the hands of sin and death. That's Romans 8, verses 1 through 2. No one is free from struggling with sin. We all have our own varieties and flavors. One I struggle with is anger. Maybe you do too. Or maybe not. Doesn't matter. To God, sin is sin, and we all have our own variety, our own flavor. Because we're imperfect people, we make mistakes. God knows this. He even gave us the Holy Spirit to help us know when we've done something wrong. Remember, it's called conviction, not condemnation. That's the work of the enemy. But because we've all sinned, the chatterbox knows we're all vulnerable to the lies of condemnation. If we can be forced to focus on our sin just long enough, our conviction from the Holy Spirit can be twisted into condemnation from the enemy. When this happens, the chatterbox is quick to turn out a vicious cycle of personalized lies. Here's one of my own examples. I can't believe I just did that. I really screwed up this time. Actually, yes, I can. I always screw things up. That's what I do. I'm a screw up. If we're not careful, the chatterbox can use shame to turn one mistake into our entire identity. That's what he wants. Then the times in our lives when we need to feel God's presence the most become the times when we feel like we can come to God the least. In God's presence, there are no lies of condemnation, only the truth of His limitless kindness and forgiveness. Even though the chatterbox can disguise conviction with condemnation, it can never change the truth of what God says He's already done for us. God says He has already forgiven us, so we should never feel condemned. God says He has erased all condemnation for those who know His Son. Being convicted of our sin is not the same as being condemned for it. If we listen to God's voice, we'll only hear truths that cannot be twisted. Join me in a word of prayer. Heavenly Father, thank you so much for your endless forgiveness. No matter how far I feel from you, I know that you are always there with me. I release all condemnation today and see that you have already forgiven me. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen. And happy Monday. I do hope you had a great weekend. Let me give you the numbers from around the world. We'll start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow is down 62 points. The NASDAQ is up 91. S&P 500 is up 13. The Russell 2000, our man in the street, is down 16 points. So yes, we have those dreaded divided markets again. Two of the major indices in the red, the Dow and the Russell, the NQ and the S&P in the green. Neither one by a lot. None of them qualify as a mover or shaker. That's 1%. But when you have the divided markets, you tend to have less follow-through on your trades. And, well, that leads to more stop-outs. But you got to trade what's in front of you. In the commodity basket, crude oil up $1.89, trading 78.73 last. That's a gain of 2.5%. Gold up $29.30, trading 25.0270 last. That's a gain of almost 1.25%. Silver up 38 cents, trading 27.97 last. That's a gain of almost 1.5%. In the Asian markets at the close, the Nikkei posted a gain of 193 points. The Shanghai fell 4. The Hang Seng gained 21. And in the European markets at the close, FTSE gained 42. The DAX gained 3.5. The CAC fell 19. Not a mover or shaker in the whole bunch, with the exception of crude oil and gold, but that's in the commodity basket. In Asia, at the close, was a mixed session. Nikkei, the only one in the green. No, I'm sorry. Shanghai, the only one in the red. In the European markets, it was a mixed day. The CAC, the only one in the red. But as I said, it's a mixed Radio Monday here in the US of A. Got the Dow and the Russell in the red. The NQ and the S&P are in the green. Now, let's take a look at some news headlines. Normally we go straight to market news, but I think this is pretty important. The U.S. is sending a guided missile submarine to the Middle East and speeding the arrival of an aircraft carrier strike group as Israel braces for retaliatory attacks from Iran and its proxies after the assassination of senior members of Hamas and Hezbollah. Pentagon confirmed late yesterday that Defense Secretary Lloyd Austin had ordered the dispatch of the USS Georgia guided missile submarine to the region. He further ordered the USS Abraham Lincoln Carrier Strike Group, which is equipped with F-35C fighter jets, to accelerate its ongoing transit to the area. The orders and the rare step to publicly announce the deployment of a submarine came as Austin reaffirmed Washington's commitment to take every possible step to defend its ally in a call with his Israeli counterpart. Well, is it going to be World War III? I don't know. I can say things don't look good, but this life is temporary at best. Eternity is where our focus should be on. But yeah, we still got to get through this life, so just be prepared and know in your heart and in your mind that whatever happens, God is in control. Oh, and another interesting non-market bit of news. Presidential candidate Kamala Harris, one of her policies is that no one should have to show ID to vote. But when she came to Arizona a few days ago, if you wanted to attend her rally, guess what you had to show? Yeah, photo ID, driver's license, state-issued ID, passport. So you got to show identification to get in to hear her repeat that same speech again. But vote for her or anyone else, no ID, because the deplorables might not have ID. And of course, she wouldn't want the deplorables stinking up her rally. So I guess that all sorts itself out. Let's talk robots. When the Department of Defense commenced its robotics challenge in 2015, the stated goal was to develop ground robots that can aid in disaster recovery with the help of human operators. Each android was given an hour to complete 8 tasks, which included driving a car and climbing some stairs. Nearly a decade later, generative AI is accelerating that learning curve, pushing human-like machines to pick up new tasks in real time. Now, the co-founder of Apptronic, an Austin-based robotics maker, said the holy grail for us is what we call zero-shot learning, or the ability to show the robot what to do. And it can do it the same way that you do. That vision is slowly becoming reality. OpenAI-backed Figure unveiled the latest iteration of its humanoid robot. The robot is equipped with a vision language model that allows the machine to reason visually and self-correct learned behavior according to the company's claims. And again, the name of that company is Figure. And in June, Tesla presented an updated version of its Optimus robot at Tesla's Investor Day and showed it roaming a factory floor. CEO Elon Musk touted the robot's potential, saying it had the ability to push the company's market cap to $25 trillion. That's with a T, $25 trillion. Robotics have been integrated into factory floors and warehouses to improve efficiencies for years, but current machines in use have largely been limited to moving from point A to point B and tackling just a handful of tasks. Humanoids that can adapt to existing environments have long been seen as the ultimate test if they can work alongside humans in spaces built for them. If you want a versatile robot, then having a robot that can retrofit into our environment so you don't have to change anything seems important. Today, 3 to 6 times the price of the robot is spent just integrating that robot into a new workflow. Now, NVIDIA is driving rapid development through an ecosystem built specifically for humanoids. I mean, even that name is a little creepy. It combines high-powered chips that process data at high speeds with the Omniverse, a digital world that allows users to train robots on skills applied in the real world. The company announced the development of AI foundation models earlier this year. Just last month, NVIDIA unveiled NIM Microservices, a visual training ground that allows generative AI models to visually interpret their surroundings in 3D. This is quite a leap forward. Pretty quick. Now, you're probably wondering why gold is up so much today. Well, we've got some key U.S. economic data due later this week, with traders focused on whether the prints will reinforce bets the Federal Reserve will soon pivot to monetary easing. Bullion was trading near $24.55 an ounce at the time of this article, after dropping 0.5% last week. Investors are preparing for the U.S. Producer Price Index figures on Tuesday and Consumer Price Index numbers on Wednesday. Both will shed light on inflation in the world's largest economy. While the CPI is expected to show price increases picked up modestly in July, the annual metrics should continue to rise at a slow pace. The recent easing of price pressures has boosted policymakers' confidence that they can start to lower borrowing costs while refocusing their attention on the labor market, which is showing greater signs of cooling. Fed Governor Michelle Bowman said Saturday that she still sees upside risks for inflation and continued strength in the labor market, signaling that she may not be ready to support a rate cut in September. Higher borrowing costs are typically negative for gold because it doesn't pay interest. Precious metal has gained almost 19% this year and remains in touching distance of last month's all-time high. Along with rate cut expectations, it's also been supported by firm central bank buying and robust demand from Chinese consumers. Musk and Trump. When Elon Musk endorsed Donald Trump for president last month, Tesla founder and chief executive backed a candidate who vows to drill, baby, drill, end the electric vehicle mandate and reduce subsidies of the sort that helped Tesla become the U.S.'s dominant EV manufacturer. So instrumental have government loans, tax breaks, and other EV policies been to Tesla's fast growth that despite Musk's gradual embrace of the former president and his Republican Party in recent years, the company continues to lobby the U.S. and state governments for benefits championed by the Democratic Party. In February, for instance, Tesla, in a filing with the U.S. Environmental Protection Agency, urged the Biden administration to allow California to pursue stricter vehicle emission rules than the rest of the country. That's an idea that Trump opposes. Politics makes for strange bedfellows. Bitcoin miner Marathon Digital Holdings said it will sell $250 million of convertible senior notes and use the proceeds to buy more Bitcoin. The largest U.S. miner announced in July that it was adopting a strategy similar to the one employed by MicroStrategy Incorporated, or MR, as we call it. MSTR is the symbol, which has been accumulating Bitcoin for several years, in part on a bet that price will rise. Marathon is one of several public mining companies that have started increasing Bitcoin holdings, again in the wake of the April software code adjustment known as the halving that slashed revenue. In 2022, many miners were liquidating their coin reserves to stay afloat amid inflated energy prices and a series of meltdowns in the industry. Miners mint the cryptocurrency through a process where they compete to solve computational puzzles to unlock rewards in exchange for processing the transactions on the Bitcoin blockchain. The hodling strategy, as it is known in crypto, can enhance public mining companies' status as a leveraged proxy on Bitcoin prices in the stock market and boost their share prices, which is one of the main sources of financing for the miners. The issuance of convertible notes also raises the likelihood the holdings of existing shareholders can be diluted. Shares of Marathon fell as much as 12% today. The stock has dropped around 34% this year, even as Bitcoin itself has gained around 40%. In July, Marathon announced that it bought $100 million of Bitcoin. It held 20,818 Bitcoin, with $1.6 billion in total cash and the digital asset as of July 31st. The Fort Lauderdale, Florida-based company posted a second quarter net loss of almost $200 million, mostly from the write-down of the value of the digital assets it holds. The notes, which will be offered in a private placement to institutional investors, mature in 2031. A Polish billionaire is about to sue Meta. Rafael Brzoska and his wife plan to sue Meta over fake advertisements on Facebook and Instagram that feature his face and false information regarding her circulating on the social media platforms. Their move could be another in a series of quests initiated globally to hold the internet giant accountable for ads that keep appearing despite users informing the company about problems. This Polish billionaire is the creator and the biggest shareholder of Polish parcel locker company InPost, and he notified the company of the problem beginning July, but it failed to find a solution. He said, "We plan to file a private lawsuit against Meta. We've not yet determined in which jurisdictions we will sue Meta. We will decide that in the next weeks. We are considering absolutely all scenarios, including a lawsuit in the United States, if there is inaction in Europe." Google says it is deactivating AdSense accounts in Russia, saying Monday that it would no longer be able to make payments to users of its advertising space in the country. That's going to sting. What has been touted as Wall Street's big rotation into smaller firms sputtered just as quickly as it started. The same stocks that were for weeks finally seeing greater investor interest are now suffering a mass exodus as investors recalibrate their expectations for U.S. economic growth. Amid a rocky week for equities, traders pulled $2.6 billion from the Russell 2000 in the 5 days ending Friday, the most in nearly 3 years according to data compiled by Bloomberg. And many are betting that the worst of the sell-off lies ahead. Short interest as a percentage of shares outstanding on the fund has sparked to its highest level since December. Pullout follows a stretch when traders had been showering money on previously left-for-dead strategies that saw the Russell 2000's underlying index rise 10% in July, the biggest monthly gain since the end of last year. The gauge is now off by roughly 8% for August, with the decline coming as many start to fret over the health of the U.S. economy and the Federal Reserve's ability to bypass a recession. As I've said many times, if we get away with only a recession, we shall count ourselves a blessed people and a blessed land. Okay. Let me fix this. There we go. Maybe that did it. Here. Okay. We're in week 315. Week 314. Last week, we issued a total of 81 alerts in Logic 247. 15 never triggered. That gave us 66 actionable alerts, of which 4 or 6% would have been stopped out based on market structure and a very simple process we teach all of our passport holders in their one-on-one mentoring sessions. what a difference a week makes. We're now in week 315. Over the last 315 weeks, we've issued over 17,500 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out. Again, based on market structure and that simple process we teach our passport holders. Since the markets opened last night, we issued a total of 16 alerts. Still waiting on the outcome of 5. That's 11 actionable alerts, of which 3 or 27% would have been stopped out. So we made it the whole week last week with 6%. As I said earlier, you got mixed markets, you have a lack of follow-through, and you're going to see a higher number of valid trade opportunities get stopped out. That's the truth about trading. Now, the Logic 247 alerts. They have an entry price, an initial target, additional targets, and a final trade to target. This is how you learn to read the chart and spot opportunity. Not only entries, but additional windows of opportunity and obstacles or targets. You learn to read a chart like you do a newspaper, but instead of words and sentences and paragraphs, you're looking at price action. You're learning to read the indicators. Within a couple weeks, you should be able to look at a chart and instinctively know what the next high probability move is. Nobody knows what the market's going to do next. There's too many variables. It's not possible, even with AI. However, you should be able to look at a chart and know instinctively what the next high probability move is. And as we've shown over the last now 315 weeks, 20% of the time the market is going to do something other than the next high probability thing. 20% or less has been the average. The logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m. Doesn't matter. Futures trade around the clock, and we have traders around the globe. Now, once you've learned to read the chart using Logic 247, now you're ready to test yourself. And you can do that with CTAs, the concierge trade alerts. Unlike the logic alerts, which come out around the clock, CTAs are published shortly after the Globex Open each evening. Last night, the Monday session started at 6 p.m. Eastern. All of our members had these targets 10 minutes after the open. First thing you do when the CTA numbers are published is go to the 30-minute chart of whatever markets you actually trade. Make a note where price is at this time. Then draw a line in the sand at the long target, a line in the sand at the short target. Price gets above the 30-minute BBC, it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. The BBC is simply the green line you see on my charts. Now, for the purpose of the alerts, both logic and concierge, I use a 30-minute time frame. But you can apply the BBC to any chart. Daily, weekly, monthly, 5-minute tick chart, range chart. Because markets are fractal in nature, it functions the same no matter what market or time frame you put it on. Again, if price gets above the BBC, you expect higher prices. If price gets below the BBC, you expect lower prices. This is where you learn to look left, spot those entries, to spot those obstacles. First, Logic 247 and the CTAs, because our ultimate goal is for you to become self-sufficient. As long as you're depending upon someone or something to tell you when to get in and when to get out, you're never going to trade for a living. So if that's your goal, to trade for a living, then you've got to learn how to read the chart. Also, you got to learn how price behaves at a weekly trading zone, because price is always trying to reach a weekly trading zone. From the moment the markets open Sunday night till they close Friday afternoon, price is above the 30-minute BBC. It's trying to get to the weekly zone above. Price is below the 30-minute BBC. It's trying to get to the weekly zone below. We've published the zone since December 14th of 2009. Almost 15 years. They come out Monday morning at 6:15 a.m. Eastern, and once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. You just have to resist the urge to make it more complicated than that. As long as you know which way the wind is blowing, it's pretty simple to reach your goal for the day. Now, you got to learn to use multiple time frames. Otherwise, you'll get tunnel vision and you'll never know what's really going on. This is the daily chart of the S&P. Now, we're looking at a daily chart because institutional traders, the ones with the huge account size, hundreds of millions, billions, trillions of dollars, the ones who trade in incredible size and actually move price, they look at daily, weekly, and monthly charts, the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. It all has to do with account size. If you'll train yourself to spend 2 minutes with the daily chart of whatever it is you trade, you'll see your results improve over time. If the institutional traders are buying, well, then all you've got to do is what they're doing long enough to get your goal for the day. If they're selling, so 3 huge days of selling here. Then we consolidated sideways at the previous bullish cross. Spiked it last Monday, but then price rose and spent most of the session sitting right on top of it. We ended up closing the session here. Then Tuesday, then Wednesday, then Thursday. Here was Friday, where we had very low volatility compared to these previous days. Look how small that candle was. And it looks like we're about to do the same thing today. We identified the 50% fib retracement as potential resistance, and it was on Friday. And it's been a little bit of back and forth today. We've been below the 50, we've been above the 50. We're now back above it. So the next logical place for the market to find resistance overhead is at the daily BBC and the 38% fib retracement. Price moves in legs, not a straight line. Get a leg and a retracement, a leg and a retracement, a leg and a retracement. So it would make perfect sense if price can overcome this 50 to work its way up to the daily BBC, and then we would anticipate another leg to the downside. As you can see, when price pulls up from below to the BBC, it holds more often than it doesn't. And when price pulls down from above, the pullback holds more often than it doesn't. But eventually, price will trade through, just as it did back here on May 3rd, and just as it did here on July 19th. So we were in an uptrend from April till we put in the all-time historic high, July 16th. And then we gave a whole lot of that back in a very short period of time, from July 19th, 16th, to August 5th. But now we're catching that bounce. Price always reverts to the mean. In our case, the mean is green, and again, it's called the BBC. Bull bear cross. Price crosses below the green line, bearish. Price crosses above the green line, bullish. And the pullback holds until it doesn't. And when it doesn't, and it pulls up from below, then it does. And then we found support here at 38% fib retracement for 5 out of 6 sessions. Once we got through that 38, we cruised through the 50, through the 62, down to this previous bullish cross, which we always expect to be good support. Just as up here, the bearish cross was good resistance. I've watched this closely today, and the institutional buyers seem to have trouble making up their mind. I think eventually they'll take us up to the daily BBC, possibly spike it and hit that 38, and then we'll probably see a leg to the downside. Now support, if price were to just start dropping right now, or if we were to drop into the close, we got potential support at the daily step line, at the 62% fib retracement, and red and falling. Potential support times 3. Up here, potential support times 3 here, potential resistance times 2 here. And of course the 50 is always potential support on the way down and potential resistance on the way back up. On the ES, this is just how quiet a session it's been. Now these are last week's weekly trading zones, because the weekly trading zones don't come out until Monday morning at 6:15 a.m. Eastern. So all alerts issued on Sunday night are based on the previous week's zones. When price rallies up to a zone, we expect resistance until proven otherwise. Now the vertical line separates today, Monday. Here's Friday, here's Thursday. Resistance at the zone sent us back to support at the BBC last night off the open. We just kind of traded sideways. Price was trapped. Red and falling overhead, resistance. BBC below, support. So we got a leg and a retracement, and a leg and a retracement. A leg that took us to the zone from not today, but last Monday. Back to the BBC. That's how price moves. From support to resistance, back to support, back to resistance, back to support, over and over, again and again. Only 3 things happen at a weekly zone. 70% of the times consolidation, 20% of the times rejection, 10% of the times the slice. And this is some wide-ranging consolidation, but price is still having difficulty overcoming and holding above the 5382/83 zone from last week. On tomorrow's broadcast, you'll see this week's zones, the ones that our members and trial members got this morning at 6:15 a.m. Eastern. On the Dow, here's where we opened last night. Leg and a retracement, leg and a retracement. See how those pullbacks hold again and again and again. Now we attempted Friday's high, which is where the CTA long target, but there just wasn't enough buying interest. And when that happens, this happens. Price came back down to the zone published a week ago, found support, just as it did on Friday. Support, sent it up to the BBC, which we expect to be resistance. This is resistance times 2 because you've got red and falling and the BBC. So resistance sends the market back down to support. And support sends the market back up to resistance. So now what's price looking for? Support. It's found support a number of times over the last 3 trading sessions at this zone published last Monday. So while we didn't make it all the way to the long target, all the conditions were in place. This candle opened at 39, 660 and ran up to 735. It's 60 points. And of course, we've hit the short target once, twice, and now 3 times. On the Russell, we opened below the BBC, came down to the target, support, sent us to resistance, and then we just consolidated along the BBC. Another drop to the short target, which gave us a bounce and sent us up almost to the high of Friday, or the closing high. This was the high of Friday. But price couldn't take out that high. If price had been able to take out that high, which, by the way, that high was, you see that high? See that bearish cross? When you have a bearish cross that leads to an extended move, first time price revisits that area will almost always be good resistance, and it was. Now we've dropped below target and below last week's zone. So the spot to look for support right now is at this previous bullish cross. Call it 2053, just to be safe. All right, we'll pick up with the NQ when I come back. Michael's going to give us a recap of what happened in the live training room this morning.
Yes.
And then we'll do some live trading on TradingView for about 30 minutes. And then I'll be back. All right, looks good.
Good. Oops, I've got to shut off my recording this morning. There, it's off now. All right. Here we go. We should be looking over here. It's all good. All right. Good afternoon, everyone. Today is Monday, the 12th day of August, 2024. Wow. Now, if you have not taken a free trial with us and you want to, go here to mytradingiq.com right here. It says sign up for your free 5-day training now, 9:15 to 11:30 Eastern time. There's no credit card required for the trial. When you click on that, it is going to bring you to this registration page. Yes. This registration page. And on this page, all that we ask for is your name, your email, your phone number. There are 5 multiple choice questions. Down here, if you have an industry, give us your machine ID. If you have TradingView, give us your login ID. Right here it says join webinar in progress. That's, well, if we're doing it this morning, that would be true. But click on that, and once you do that, it'll send us all the information we need to activate the indicators for you. Okay, get your indicators indicating on your charts. All right. So today, as I said, is the 12th day of August 2024. If you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today is the 40th day. As I just said, it's the 12th day of August. We made 48 ticks on the NQ. We had 1 trade on the NQ, a 48 tick winner. We had a couple trades on the Russell. We ended up with -5. We had a few trades, couple trades on the YM. Ended up +27. And we had a couple trades on the ES. We ended up break even there. All right, so we're +350 on the morning session. Today took 11 minutes and 1 trade to get to the goal for the day. At that point, we're up $2,700, and we took a total of 8 trades. So on the month now, we're at $5,065. That's over 8 business days, averaging $633 per contract per morning session. Now, down here, if, well, okay, on the year, I'll get to the 25-20 blueprint in a second. On the year now, we're at $63,017 over 149 business days, averaging $422 per contract for a 2-hour business day. All right. Now, if you were to quit trading when you get your goal for the day and add 1 contract per month, so far this year you'd be on your 8th contract, and you would have only had to work 47 3/4 hours so far this year. Right, 47 3/4 hours, and doing that with 8 contracts now would be averaging $1,763 an hour. Okay, quitting when you get the goal for the day. So far this month, you've only had to work 84 minutes. 84 minutes so far this month. So about an hour and a half so far this month you'd had to work. And so far this month, in that hour and a half, you'd be up $18,550 with the 8 contracts. That is quitting when you get the goal for the day. I'm sorry, you'd be up $7,420. $7,420. $18,550 at 20 contracts like me. But with 8 contracts, you'd be up $7,420 in that hour and a half. Okay. Now, if you did start like me in January of last year with the 2420 blueprint, you'd be on your 20th contract right now, the end of the 2420 blueprint. And if you did that in the same 47.75 hours, now you would be up on the whole year, you'd be up $336,282 if you quit trading when you got your goal for the day and did everything exactly like me. This month, you'd be up $18,550 for that hour and a half of work. Okay, that's with 20 contracts on. That's where you want to be. So with the 2420 blueprint so far this year, with starting out with 1 contract in January, we're up $1,763, and starting out with 1 contract in January of last year, you're averaging $1,763 per hour. And if you started in January of last year and you added 1 contract a month, you'd be averaging $7,047 per hour right now. Right at the end of the month, I was curious where we were going to be at the end of the month, at the end of the 2420. It's actually going to be the 2020 blueprint. I was curious where we're going to be at the end of the 2020 blueprint. And hopefully, we should be well over $7,000 an hour. And this number, if we're going up, I don't know, per day, $2,700, and we have 10 days left, 10 business days left, I think, right? 10, 11, 12, 13, 14. Even if we just got the goal for the day every day, it'd be $28,000 more by the end of the month with 20 contracts on, even if we only just got the goal for the day. So this month had to be 40,000 to be able to go to another contract next month. So that's easily going to be done. All right, so let's get into it. Right, we didn't take a ton of trades, but we certainly did have some opportunities. Now we're on the larger time frame here. We're on a 19 range. Right, you're used to seeing it on the 7 range. It's almost 3 times the normal time frame you're used to seeing. So there's not a ton of trades. But I was saying last week, the black arrows now, with a larger time frame, the black arrows are more significant. All right, the black arrows are more meaningful. Okay, more meaningful. So if, excuse me, I'm choking. All right, better. All right, so our first trade, where we got the goal for the day, I think, was right here. All right, we took this black arrow short right here and picked up 27 ticks on that YM trade right there. The next one that we took was over here. We ended up with a break even on that. All right, it did go 10 ticks into profit. Now look at all these black arrows. All right, look at the black arrows and look at how well the black arrows perform on a larger time frame like this. Okay, when you get to the end of the trend, they don't perform, but everyone leading up to the end of the trend was a nice winning trade. All right. One of the things that Ross, are you in here right now? Let me see. Ross is not in here right now. Okay. Well, I'll get into it in just a minute. Let me just finish going through this. All right. We had just those trades I am during the break. There was this one trade right here. I don't know why I'm a blue arrow short. That went enough to get stopped to break even. A blue arrow long over here went enough to stop to break even. So 2 trades there, both break even green trades. The Russell, again, Russell's on a 19 range. Now, the reason I have it on a 19 range, guys, if you're in one of these ones that has 4 ticks per point, it is 1 less than a multiple of 4. Okay, that's that part of it. But if you're doing it on the YM and the Russell, it's really easy to do the math. It's a multiple of 10. So it's really just do the math. All right, you're at 20 20 ticks, or in the YM is 20 points. So, the high of this bar is 430, so you'd be selling 410. And over here on the Russell, below this bar is 63, so you'd be buying 65. It's easy to do the math that way when you're doing the range bars. Okay, that's why I'm using the 19 range. It works out really well that way. Okay, so on the Russell, let's get into the Russell. On the Russell, we started out with, hold it, right here. This trade right here, we ended up with plus 10 ticks on that one. Went sideways for a little while. I thought it was going to stop out, but we ended up with plus 10 ticks. Now the bracket that I'm using on this is a 25 by 45 bracket is what I'm using on this. 25 by 45, okay. And the next one that we took right over here, we ended up with another 10 ticks. That put us at plus 20. And then we took this one right here, went within a tick of getting our stop to break even, and then it stopped us out. We were minus 25, so we were minus 5 overall. I missed the green arrow there. That would have gotten us another something. And I missed the blue arrow here. That would have stopped out. During the break, there's a nice black arrow here. That would have covered that one. And the black arrow here, that would have given you some profit. A green arrow here, that looks like it probably would have stopped you out. Okay. Remember, you're trying to get the goal for the day. You're not trying to sit in here and trade all day long. You're trying to get the goal for the day. It was pretty easy to do. Look at the NQ right there. I did take an NQ trade today. It was looking a little better than it was last week. Most of the week last week. All right. The ES, we ended up breaking even on the ES after just a couple of trades today. Okay, and we left the ES on a 7 range. All right. So we can go back to the beginning of this. Ooh, went too far. All right, our first trade on the S was a break even right there, and our next trade on the S was a break even right here. There were some more trades in there, but it did get into the lesson plan. I guess I missed all of these blue arrows in here. That one, that one, that one, that one. And then we had this movement down right here at the end of the session. That one there. And that's it. All right, and that was it on the ES. Now on the NQ, we took one trade. And I'll see if I can find that one trade. The NQ is on the 31 range. Oh, I guess we took 2 trades. All right, we took this one right here, and we got 48 ticks on that. 48 ticks on that. And then we took this one right here, and we had a break even. And that is all that we did with the NQ this morning. Oops, I say that, and I totally forgot I took that last blue arrow. I'm still in it here. Here it is. I'm still in it, and it just took me on a break even. I just moved my stop to break even on it. I don't know if I should have stayed in that or not. I stopped looking at it, but let's go all the way to the end and see. I don't know how I ended up staying in it, but anyway, that was the trade, and I just got out of it with a break even. During the break, it doesn't look like there was anything we could do there during the break. Okay. All right, so now we have, well, I guess we get into trading right now. So for anybody that's watching, that's in the YouTube stream right now, if you have not taken a free trial with us and you want to, go get our mytradingiq.com, click on this purple button right here. When you click on that purple button, it's going to bring you to this registration page, where all that we ask for is your name, your email, your phone number. It's 5 multiple choice questions, and right here, if you have Ninja Trader, give us your machine ID. If you have TradingView, give us your login ID. If you have both, give us both. Okay. If you just have Ninja Trader, I suggest you take the TradingView trial. All right. If you haven't taken a trial with TradingView, go here to mytradingiq.com, click on Trading Platforms, and just follow the instructions. Instructions right here on TradingView platform. Okay. It's really easy to do, and you'll really benefit from that. If you are trading futures and you take the trial with TradingView, you have to get futures data. All right, you have to get the futures data. It's $7 a month to get real-time futures data, and to get it, all you need to do Let me save this for a second. All I need to do is go here, then go to, well, for me, it's CFRN. Whatever you're logged in as, you're going to have to give us this too. Whatever you're logged in as, we're logged in as CFRN right here. You go there, go to account and billing, and once this opens up, you will see this group right here. This is all you need. The CME, CBOT, Comics, NYMEX, CME group, Emini included. That's what you need. $7.60 after tax. It's normally $7, but $7.60 with tax for me. Okay, that is all you need to do. Get that, get your charts going, and you will be able to start trading with real-time data. All right, so now I am missing one of my DOMs. I'm missing the YM DOM. Hang on, I'm sure that is from this morning. Here it is from this morning. Move that over. Get rid of that. Get rid of that. There we go. All right. Did anybody have any questions for me yet? I don't see any questions. And let me open up the YouTube and see if we have any questions there.
Nope.
Okay. Excellent. So right now we don't have any trades either right at the moment. Okay. What time is it? It's 1:07. So we have 23 minutes. This is a trade here on the NQ right now, a purple arrow trade. Now let me explain to you what a purple arrow is. A purple arrow is a pullback that tests the BBC ribbon when the outer bands are the right color. Okay. So right now I don't have the outer band showing, but if I put them on here, you'll see that the outer bands will be blue, and they're probably crunched up right now. I'm sure there's a reason why I had them off, but there are the outer bands. Right there, they're crunched up. That's what I was thinking. It looked like they would be crunched up right in this spot right here. And this is the context that you used to see. So that is the purple arrow off the ribbon when the outer bands are the right color. All right, now I prefer to see a purple arrow when the bands are spread, kind of like this is right here, when the bands are spread. And so that's going to be a good one here. I'm going to throw my stop hook even on it right now. Okay. When the ribbon is spread out like that, the purple arrows when the ribbon is spread out like that are usually pretty good. You want to see the outer bands. A lot of times they're going to be flat when it's had a direction change. But ideally, you're going to see one of these in a situation like, well, I don't know how many we're going to get in here because we had some pretty strong trends this morning. But yeah, this was kind of flat in here. You want to see them when the ribbon is spread like that, sort of like that, but more in here if you had one in here. On a larger time frames, you don't get them as often as you do. This is what I was trying to get to. Something just like that one. When the ribbon is spread out, this one right here. Getting them when the ribbon is spread out like that right there. That's what you want. This one didn't work out. This one didn't work out, but the ribbon wasn't really spread out on that. This right here is what you really want to get, those purple arrows. All right, what they're illustrating for you is that you have a pullback. You're in a trend by having the ribbon spread. You're in a trend. And the pullback is just a slight pullback, but it's found in the area of support where both the long and short term are both in favor of the trade. All right, that's what the outer band being the right color means. Both the long and short term direction are in favor of the trade. So you get a pullback and you actually bounce off of something when you have both the long and short term in favor of the trade. Okay, that is what that's all about. All right. Yes. All right. So now we have a green arrow after the purple arrow. The purple arrow did put in a little bit higher swing, so the green arrow is still good in here. Now we're in right now. We're in a downtrend, and so this is, you want to wait for the green arrow to actually print when you're in the pullback leg of a downtrend. You want to wait for it to actually print, which it did do. And so, it's an okay trade to take right here. The okay trade to take was right there at 633.75, and I got it at 633.25. And here it is. My stop's at break even now. Now it should go up above the prior swing high right here. And it just took me out of break even. So I now have 2 break even trades in this session. Cancel all on that. Cancel all on that. Okay, what you anticipate is that it's going to get up above this level right here. If it fails to, then what should happen is we should get another nice leg down, right? The leg being like this. Now leg lengths are in tomorrow's lesson plan, I think. Maybe Wednesday's. I think they're in Wednesday's lesson plan. But this will be the next leg length down, right here. Okay, if we fail to put in a higher swing right here, right now, then that's what should happen. Right? Pretty simple stuff. Should, if we fail to get up above that level, whoops, up above that level, we change these so they're not yellow. Purple. Okay, if it fails to get up above that, then we should see a big move down. It's as simple as that. All right. It should continue the trend and move it on down. Now it does have some support down here, 596. Now it's got scattered support right through here. The next one down, if you follow that leg length, the next one down is all the way over here. And it does have support there too. So if it fails to put in a higher swing right here, that's what it should do from a big picture. Okay. Now, Dwayne's gone over all this stuff with you already. Was CME plus what for real-time data? Oh, John, I'll show you. Hold on. It's a CME group. I'll show you. It looks like this. You go accounts and billing. And it's $7. You might have to click on get real-time data, but it's this one right here. Okay. Here, I'll take a screenshot of it and I'll email it to you. This is the only one you need. I guess you don't need the whole PayPal thing in there, but that's the one you need right there. Okay. All right. So we did fail to put in the higher swing there. We had 2 break-even trades right in a row. This is a trade here on the Russell right now. It's a ribbon trade. All right, you didn't get any kind of an arrow because we didn't come out of the overbought, but it's a ribbon trade right there. Okay. And Joe, let me mail that to you. Now I'm thinking about it. Be over here on this side, and you're in this set of emails over here. I'm going to do it from this one too. Mark. Okay, Mark L. To John. Okay, I just emailed that to you. Okay. So back over here. Look, it's trying to put in that higher swing right now. So in this consolidation right here, I mean, this is really a potential turning point. We'll see what happens with it. But in this consolidation right here, it's trying to put in a higher swing. And if it does put in the higher swing, it could run up. Now, if it does run up, the same leg length works both ways. Okay, this leg length that we grabbed goes the other way too. We have to go from down here though. It goes both ways. All right. So this is what it should get up to if it starts moving up. Okay, and it did put in the higher swing, so there could be some long opportunities coming up right here. We had 2 break evens through here. We could have taken profit on each one of those, could have taken 10 ticks profit on each one of those. But right now it's put in the higher swing and it's getting ready to go long. So we just focus on one market, we can just focus on this one for right now. We can do that. John, let me just make sure I sent the right email. Yeah, I did. Okay. Okay, it's like $7 a month plus tax, depending on what state you live in. All right. So remember all the stuff I was saying about this down here. When it comes out of the oversold, if the ribbon is spread. When it comes out of the overbought, if the ribbon is spread. It doesn't have to be off. It doesn't have to be off the ribbon. Just if the ribbon is spread, if it comes out of the overbought. Okay, going off the ribbon is helpful, but it doesn't have to be. If the ribbon is spread. Okay. So we did put in a higher swing, and now we need to pull back down. And we've already tested the ribbon, so we don't actually have to test the ribbon here. And remember what I said earlier about the black arrows having more meaning with a larger time frame like this. These black arrows, more meaning with a larger time frame. If we get a black arrow on this, if it comes down and gets into the oversold right here, not this one, but the regular slingshot, the ultimate slingshot, if it comes down and gets into the oversold right here, then we will have, well, we'll have something there anyway. Okay. And so we don't have a lot happening there. So let's go see if we got anything else going on. No. Yeah. Okay. The outer band's not right. The outer band's not right. The outer band is right on the ES, but let's just slide this over some and this over some, so we have more to see on these two markets right here that have potential trades. Okay. You see how we moved up right here? Spread the outer band, spread the ribbon. If I add this back here on the bottom, look for opportunities. Add this one back on the bottom too. And so now we're looking for a pullback right into here, right, on both of these. Who is in there? Hey, Rico. Caleb. And so it's starting to make a run here. Now these other markets are still no good. You see the outer bands. They're still not right on these other two markets over here. So we're waiting for something here. Now that is the thing, when you go to a larger time frame, you're gonna have fewer trades. You know, if we bump this down to a 15 range, we probably already had a couple of trades in that direction. Yeah, so we had a couple of trades, 1, 2, 3. I mean, you can do that if you want to. It's up to you. But fewer, more meaningful trades. That's what we're looking for. There was something else that I was looking at out here. I think I got it on the 7th one. Yeah, the ZB. The ZB. Now I have this actually giving me, it's triggering a bunch of alerts on my phone right now. So I created to set up a notice before the trade and then a trigger as the trade happened. I think it might be doing it over here. Let me see. Going to log. No, maybe not. I didn't set up this account. That's right. Let's see if I actually set it up in here, if I could actually create that alert. Don't know. Range sniper. Nope. I didn't put it on there. Anyway, some good stuff happening there. The Bitcoin is right here. It's having a pretty good run. And I don't remember what this one was. What was this? Mara. Oh, Mara's having a good run right now too. All right, it's got a big gap to fill right here. The Mara does this big gap now. I don't know why it had that big gap. Honestly, there must have been some news or something like that last week. Or today. What's this today? This is 5 minute. We had a huge gap down today. That was today. So there must have been some sort of news today that made it gap all the way down. And now it's recovering.
They're selling bonds to buy more Bitcoin.
Are they? And that's reflected negatively in the price? No.
It dilutes current shareholders.
Yeah, that's what I was thinking. It's sort of like a reverse split, almost, kind of. Almost. All right, so let's go back to just the 4 because I think we're about to get some action here on the NQ and on the ES. Now you see, this is oversold, this is oversold, this is oversold, and this is oversold. And so on the 31 range, you're going to be looking 8 points above the bottom. So it's going to be 78, 75 right now. This way you'd be looking to buy on the NQ on an up close. All right, you want the up close to pull it out of the oversold though. You definitely want to see that come out of the oversold. On the ES, it's going to have a black arrow here on the ES too. If it pulls out of the oversold right now, but it's not as appealing to having the black arrow over here on the NQ. Okay, over here you see how the outer bands, the YM have just crossed, and the outer bands are starting to cross here on the Russell. So the pullbacks on those should spread out the outer bands a little bit. It's gotten this one out of the no trade zone already, and it might get that one out of the no trade zone as well. So we'll see as we pull back here and here. All right, we're sideways here. We almost popped out of the oversold right there. Not quite. The NQ, where is this? 678. Okay, so the NQ did give the up close with the black arrow. I was wondering what the heck was going on over here. Okay. Now the NQ has got, it's got a spread again, and the totals are really tiny. The MNQ, on the other hand, does not have a spread, and the totals are not really tiny. I'm just noticing this right now. If you're trading one contract or two, or maybe 3 or 4 with the regular NQ, then this isn't that bad. When you're trading 20, you know, right now, you would be giving up like 4 or 5 ticks immediately by placing the trade. So let's wait for the pullback here. Okay, the ES is pulled all the way back down and hit the ribbon now. We want the up close here. It's got 73.75 up to 75.75. Here, this is just your regular normal ES trade right here. Okay, 10 tick stop, 7 tick range bar, 8 ticks above the bottom of the bar on the ES. That's what we're looking for. Okay, and that just fell right through. So it doesn't look like we're looking for that anymore. Look, we almost got up to this level here that we need to get up to. That was the next level. Okay, now this kind of bugs me. Remember what I was saying last week? You may or may not remember with both of these. If we look at the retracement level of this, when you get a big extension like that, the retracement is usually going to be too big to give you a trade setup. Okay, it's going to be too big to give you a trade setup because it's going to go right through. It's going to go right through the BBC. See what I mean? It did the 50% retracement on both of them, but it went right through the BBC. So it retraced too far to give you another trade setup in that direction on both of them. And that may very well be a blessing and a curse. It's not really a curse. It's just a blessing. It didn't give us a trade setup when we didn't really have one. Okay, and it's a direction change. These other ones never really got it together to give us a trade setup on either one of those markets. Neither one really got it together. And let's go back out here for a minute. And see, 5 markets. It's Bitcoin. Bitcoin's still bullish on the day. Okay, and 6 markets. This is Mara. And 7 markets. This has got the bonds, the 0 bonds. And that's it. Go back to 4. Okay, so the NQ is just about turned around already and ready to give us a short trade.
The bonds are a private placement with institutional investors.
Interesting. What do the bonds give them? What are they giving up?
I don't have the details.
Do you have any detail about the bond? Be interesting to see what they're actually selling. $6.50. Did it say how much they were looking for? The bond sale.
Hang on, I'll tell you. The largest U.S. miner announced in July that it was adopting a strategy similar to one employed by MicroStrategy. Marathon is one of several public mining companies that have started increasing their Bitcoin holdings again in the wake of the April software code adjustment known as the halving. Now, the issuance of convertible notes also raises the likelihood the holdings of existing shareholders can be diluted. In July, Marathon announced it had bought 100 billion of Bitcoin. It held 20,818 with 1.6 billion in total cash and the digital asset as of July 31st. This article doesn't go into the notes, which will be offered in a private placement to institutional investors, mature in 2031. So, no, this article doesn't go into any granular details.
Okay. All right. I will. Well, actually, we've run out of time. I can't really do much. All right. So let me just say this: we'll just have to keep an eye on the price, but I think it's going to recover. I mean, there's no reason for a sale of bonds to really kill the price. You know, those bonds going to mature over time. Right now is immediate sales is probably a good opportunity to buy. I would think. Right? If you go all the way out there, was it Mara that was on 7? No, it's Mara that was on 6. Probably a buying opportunity. I think that's how people are going to see it. You see the way things are coming up, the retracements.
Buying the underlying asset makes more sense to me than buying stocks of a company whose business is buying the underlying asset.
Mm-hmm. Yes. So the pattern right here, it's going to fill this gap, and it probably will fill this gap. Stocks don't have to fill the gaps, but it probably will fill this gap, I would think, relatively soon. That's a pretty big gap for a single day. The way this is looking right here, you have higher highs and have higher lows. Right here, you have an equal low. So this right here is kind of important. What happens right here? It's got to close up above everything and start moving up and put in a higher high is what we need to see here. And by the end of the day, if it does do that by the end of the day, I think you're going to see this gap fill up pretty quick. From a charting perspective, that's what it looks like to me. If this continues sideways here, then
I think
the support
people
down here
are starting to realize that introducing a middleman defeats the whole purpose. I'm buying stock in a company whose business is buying Bitcoin. When it's I can just level the playing field and buy Bitcoin myself. That's kind of a no-brainer.
Yes. Yeah, and all the expenses that come with the stock, the company that's buying the Bitcoin. You don't have any of those expenses when you buy it yourself.
Yeah, and Bitcoin will never send out a press release that says, "Hey, we're selling bonds."
Yeah, so we're selling bonds to buy Bitcoin. But from a structural perspective, it's at kind of an important spot right here. The Mara is right here. You see the triangle, lower highs, higher lows. Oh, that's an important spot right here. I think it's going to break out above it and fill that gap on the upside. That's probably what it's going to do, in my opinion. All right, so
we got high impact news tomorrow morning and again Wednesday morning.
Yes. Yeah, we do. Tomorrow morning we have PPI. And what I was saying last week is what we see in the markets today is probably going to be factoring in tomorrow morning's news. So
I think it's CPI tomorrow, PPI Wednesday, or vice versa, one or the other.
Yeah, I think so. Yeah. It is. I know that it's something like that. I don't know which the order is, but
I think the CPI comes out first.
Yeah, usually, I think. PPI tomorrow.
PPI comes out first. Okay.
This time, anyway. But we have inflation coming up this week too, so that's a big deal too. Right. Tuesday is CPI. Core PPI. No, core PPI. Yeah, core PPI Tuesday. Then Wednesday, all this inflation rate. All this. We have a lot of news coming out this week. Actually, I don't even see the CPI. Did I miss it? Oh, here it is right here.
Yeah, it's in there
That's
somewhere.
Wednesday too. Yeah, that's Wednesday. Wednesday also. No, that's Wednesday. It's CPI. Tomorrow is PPI. Yeah. And WASD this afternoon. Don't forget to remind people of that.
Yeah, guys, if you trade grains, you want to be flat. Well, that's already happened. 12 noon Eastern.
Yeah, it's already happened. That's right. It's already happened. I don't know what happened with the grains. I'd be interested to see that. Let me go on to the 8th one of these things. Avgo. I don't know what that is.
GC would be corn.
In corn.
At the very top. No,
that's not it. But you can see the reaction right here at noon. That's not it. GC is what it is on DT. I don't know what it is.
Just click futures only. Narrow your field down.
Futures.
And type in corn.
There. Now type corn. You are right. Here's CBOT. ZZ is what it is. Okay, so it's about the same reaction right here.
Yep.
That was corn. And ZS should be soybeans. Soybeans went kind of the opposite of the corn.
Mm-hmm.
And well, it's wheat. W.
The WASD report to the ag markets is to the ag markets, kind of like what the Fed announcement is to equities and futures.
Wheat went with corn. So yeah, big stuff with the WASD report. And then you go back here to just 4. And let me say this: if you have not taken a free trial with us and you want to, go here to mytradingIQ.com and click on the purple button. When you click on that, there's no credit card required for the trial. It'll bring you to this page where all we ask for is your name, your email, your phone number, 5 multiple choice questions, and down here, if you have an NinjaTrader, give you a machine ID. If you have a trading view, give you a login ID. Join the webinar. When you click on that, we'll know that you did it, and we'll be able to enable all the indicators for you. Okay, that is how you take the free trial with us. So everything you've seen today and more when you take the free trial. All right, and there it is, D. With that, I can pass it back out to you in fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park.
Okie doke. Recap of the morning session.
Today it took 11 minutes and 1 trade to get to $2,700.
Good job.
Thank you.
All right, guys, we'll pick up where we left off on the NQ. All right, again, the vertical line separates today, Monday. Here's Friday, here's Thursday. As you can see, on Friday, price tried several times. Now, these are 30-minute candles. Tried multiple times to break through that zone. Last night off the open, we were able to break through the zone. Now, the CTA targets that are put out on Sunday night are based on last week's zones because the new zones don't come out till 6:15 a.m. Eastern every Monday morning for almost 15 years. Now, on tomorrow's broadcast, because any alerts that go out today, I haven't put any out today, because the markets have just been rolling sideways. I haven't found anything of interest. And there's a lack of follow-through because the markets are split. When we began the broadcast, we had 2 in the red, we had 2 in the green, and the indices. Let's see where they are now. The Dow's down 118, Nasdaq's up 62, S&P's up 5, the Russell 2000 is down 17. The Russell's down almost 1%. So, as long as you've got those mixed markets, you're gonna get this. If you want to play in this, you can. But anyway, we opened above the BBC, so we expect higher prices, but we hit the zone, so we consolidated. So we got enough of a leg to get your goal for the day. Resistance. That resistance was off the opening high. Said us, price always reverts to the mean. In our case, the mean is green. It's called the BBC. Bull bear cross. Bullish above it, bearish below it. Bullish above it. We were only below it for a very short time this morning, and we ran into the low that was put in on the opening candle last night. And that served as good support. And that sent the market back up to the target, through the target. But not by much. Today's high. Okay, this is Monday, Friday, Thursday, Wednesday, Tuesday, Monday. So 2 Fridays ago, this high. People always ask me, well, how far back do you have to look? As far as you need to. In this case, a week ago Friday, this high was put in, and it stopped the market dead in its tracks today. Okay? That's how markets work. Scroll left, you'll find the reason. Okay? Sometimes you don't have to scroll left. It's right there in the same session. Not able to take out that low. And we were not able to take out the high from a week ago this past Friday. So where does that put us? Just above last week's zone, just below the BBC. What would I do here? Absolutely nothing. A little window of opportunity down here. You don't need a lot. from 563 down to 533. That's 30 points in that window at $20 a point. That's $600 per contract traded. But again, these are last week's zones, so you got to check this week's zones and make sure. Like this area here. No. The zone on the downside is 450 down here. And then above that is 76. $85, 76. So that's basically the same area right here. And then above that, you got 18,700. That's a zone this week. And then above that is 18,826, which is up here. So this is just kind of sideways, low range. Indices are mixed. I like to see them all red or all green. That's when you have best follow through and you get stopped out fewer times. Right now, a break of 1630. Or I'm sorry, 18,630. Break of 630 down to 620. That's 10 points, $20 a point, $200 per contract traded. Crude on a tear. That was the biggest mover and shaker we had of the day, I think. It was up like 2%. And the price of crude moves $1 from $77 to $78. That's $1,000 per contract traded. At $79, that's $2,000 per contract traded. Since the market opened last night, opened at basically 77. Open was 76.99. Okay. And we sold off to the VBC. Pull back holes more often than not. And that sent us right up to and through the target. 77, 78, 79. This is up to 79. This is a $2,000 per contract move right here. When the price of crude moves $1, it's worth $1,000 per contract traded. When gold moves $1, that's worth $100 per contract traded. Big difference. And when silver moves $1, it's $5,000 per contract traded. Now, we're still climbing, but you'll notice the step line and blue and climbing. Step line is starting to lean towards the right. That's often an early indication the price is reaching its high, because once that step line crosses blue and climbing, then your anticipation is you're going to see a pullback to the VBC. And of course, there'll be new zones tomorrow. This week's zones, the ones that were published for members and trial members this morning. If you haven't taken the trial, do so at mytradingiq.com. Gold. This is the open last night. We dropped, but we didn't drop quite far enough to make it to the short target. Although this candle here opened at 64.8 and dropped to 62.8. So there was $200 per contract traded available there. Then price Got above the BBC, red and falling, turned to blue and climbing. So we got a leg and a retracement, pullback held, and another leg that took us all the way to the target. And then, important, we took out Friday's high. Friday's high sent us up to the zone where we consolidated for hours. And now price is attempting that zone from last week at 25.18. But also, look at the step line. Okay. See how down here, prior to the big move up, the separation, but now step line real close to crossing. But we're still building a big green candle, so you don't jump the gun. Be patient, wait, see what happens. Okay. Keep this week's zones in mind. Silver. Silver opened here last night. This was the opening candle. Dropped below the zone. We hit the target. We took out the low from Friday. By a little bit. But if we go back to Thursday, you see this low right here on Thursday? Support. Send the market looking for resistance. We overcame the BBC. Notice how spread these are. Okay. At price, step line, blue and climbing, BBC. At almost to the zone overhead. And then the step line crossed. And when the step line crosses, price will almost always pull back to the BBC. It even spiked it back down to the target. And it spiked it down to this low. We would have expected support at this area if it had gotten down that far, but it didn't. Red and falling's now turned to blue and climbing. So it looks like we're going to hit this zone again. Okay. 28.08 be the high of the session. If we take out 28.08, then we're back in price discovery mode. But you want to do your research and look right, and then you can see where the market is next likely to find resistance. If it overcomes this area here, got a spot right here around 28.25 and 28.49. You got a bearish cross up here at 28.54 and then wide open to the zone. It's because of these econ reports we have coming out tomorrow and Wednesday that gold and silver are both performing bullishly today. So after silver, the only one left is the euro, which is kind of flatlined the whole session, as it did on Friday. Got above the BBC, then we got below, then above, then below, then above. Pull back held. This high right here. We go back to Friday, you see this high? That's also this high. And basically, you got three highs right there at that area. Pull back to the BBC, the pullback holds. Punch up to the target, which was this high from last Thursday. We got through it. Right there. Back to the BBC support. Pull back held. Again. Let's push this back up to the target. But for the euro, this is not good trading. Okay. Last look at the daily. Still got a doji straddling the 50% fib retracement. You got potential resistance overhead times 2. First, you got the high of the session. Then you run into the daily BBC and the 38% fib retracement. In the other direction, you got the low of today, the low of Friday, and the daily step line, 62% fib retracement, and red and falling. When the step line, red and falling, get directly below price, and there's a high probability that when price gets there, they're going to be good support. Now, we've been above and below and above and below. You're just straddling back and forth. This is a doji represents indecision, and that's what we have among the institutional traders. Indecision ahead of these very powerful econ reports we have coming out both tomorrow and Wednesday. It's all about whether the Fed's going to cut or not and when. And one of the Fed presidents, in an article I read you earlier in the broadcast, said that she's not really leaning towards cutting. So remember, there's all these regional banks out there that bought long bonds, knowing full well that if the Fed fails to cut in September, they're all going under. Unless they get bailed out, like Silicon Valley Bank. It's some big time market timing. And Silicon Valley Bank got it wrong. Hopefully these regional banks got it right. Now, of course, Trump, in his campaign stumps along the trail, he's talked about he wants a bigger hand in these interest rate decisions. He's even talked of possibly firing Jerome. And then it becomes a constitutional issue as to whether or not he has the power to fire the Fed before his term extends, which is absolutely ridiculous because our founding fathers, Thomas Jefferson in particular, warned, if you want to destroy America, create a central bank. And that's exactly what we did. The Federal Reserve has nothing to do with the United States government. It is a privately held corporation by some incredibly wealthy families. And every time they print money and loan it to the American people so that we can service our debt, which was created because of the Fed. Do you see what a negative revolving door that is? And unfortunately, once you start that, there's no way to stop it. JFK tried, it cost him his life. Trump talked about it, and it almost cost him his life. You can hire a hitman on the dark web. So, of course, I don't encourage you to do so, but I'm just saying. We as believers place great belief in the value of a human life. But there's a whole lot of people out there who don't. And when you go on the dark web, if you ever go there, make sure the only way you can get there is with a Tor browser. And even then, I don't recommend you doing it. I mean, there's sites selling credit card numbers and people's IDs, and of course, everyone's familiar with Silk Road. And the guy behind Silk Road, Trump said he's going to pardon him. I'm trying to think the guy's name. He ran $1 billion company from his laptop in a San Francisco public library. and that's where they caught him and busted him. Trying to think of his name. It'll come to me when I'm done. All right. We know where major resistance is. And we know where major support is. What does price do? It goes from support to resistance, back to support, back to resistance, over and over, again and again. To become a member, go to mytradingiq.com. If you have questions, call us at 949-42-EMINI. You can always email us, support@cfrn.net. You'll get 2 hours of live training every trading day. That's something 9 out of 10 new traders don't get. Most new traders, they buy books, they watch YouTube videos, they see how simple it all is, buy some indicators, some oscillators, and promptly proceed to lose all of their money. Whatever career path you choose in life, you need someone to show you how to do the job. I doubt that you ever met a doctor or a truck driver who did not have instruction teaching them. Now, obviously, as a doctor or a truck driver, not only do you have a teacher, but you have to pass a test and you have to get a license. But with trading, as long as you got a few dollars to throw in an account, bing, extra $20, you can get a business card printed with your name and trader. If you try to go it without a teacher, without someone to teach you how, it's a perilous route. Trading's not easy, but it can be simple if you have someone to teach you how to do the job. As a passport holder, along with 2 hours of live training every day, you have access to private one-on-one mentoring, the strategy you learn, the indicators you own as a passport holder are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETFs, doesn't matter. Price flow is the same across all markets and all time frames. As a passport holder, you'll get the Logic 247 alerts around the clock. You get the concierge trade alerts every night shortly after the Globex open. You get the weekly trading zones every Monday morning at 6:15 a.m. Eastern. And you'll be able to attend the members only workshop on Thursday night. Everything a trader needs, all under one roof, one low price. Let's go to our good word for the day. We talked Friday about recovering from burnout. Today, we're going to talk about setting the captives free, part 1. Exodus 3:7. I have heard them crying out, and I am concerned about their suffering. For 400 years, Israel was enslaved by Egyptian taskmasters who oppressed them. Now, 400 years, think about that. According to the actuary tables, what are you going to live to be, 70, 80? Every now and then somebody squeaks out a 90 or 100, you know? And there's always an anomaly of 105. Those people usually don't have an actual birth record, but yeah, good for them, right? So we're talking over 4 generations. 400 years is probably 5 generations based on the average lifespan. So not only are you a slave, but your father was a slave, and your grandfather was a slave, and your great-grandfather was a slave, and his father was a slave. That's all you know is slavery. It's pretty oppressing and depressing. So it's not a stretch to understand their feelings of helplessness when you consider the areas in your life where you struggle from freedom from old habits. Whether it's anger, food, alcohol, drugs, sex, money, or abusive relationships. We experience a sense of powerlessness in our struggle. And repeated bids for freedom can produce increased feelings of hopelessness that lead us to give up trying altogether. The Israelites cried out to God, and he responded. In Exodus 3:7, the Lord said, I have indeed seen the misery of my people in Egypt. I have heard them crying out because of their slave drivers, and I am concerned about their suffering. So no matter what's enslaving you right now, God sees you, God hears you, and God is concerned about you. He said in Exodus 3:8, so I have come down to rescue them from the hand of the Egyptians and to bring them up out of that land into a good and spacious land, a land flowing with milk and honey. How did he do it? Their deliverance called for the death of a spotless Passover lamb. After applying its sacrificial blood to their doorposts, they cooked and ate the lamb while dressed in their traveling clothes, staff in hand, ready to leave captivity behind. Today, God wants you to prayerfully prepare for your journey to freedom. Not by your own futile human efforts, but by faith in the shed blood of Jesus, the Lamb of God who takes away our sins. In 1 Corinthians 5:7, we read this, get rid of the old yeast so that you may be a new unleavened batch, as you really are. For Christ, our Passover lamb, has been sacrificed. And that really points out the difference between the Old Testament, Exodus, and the New Testament, 1 Corinthians. And that should make you glad. We'll do part 2 tomorrow. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.